Wall Street opened a new trading week quietly as expected. The benchmark stock indexes traded flat. And today, traders will be able to evaluate the US housing market and consumer confidence. Stock investors will find out about corporate earnings for the first quarter from top US companies. The major stock indexes closed mixed on a Monday. The stocks sensitive to interest rates hurt the Nasdaq and the US Treasuries. The S&P 500 and the Dow Jones closed with modest gains. Microsoft, Tesla, and other high-tech giants pushed the Nasdaq down. The Dow Jones edged up by 0.2%, the Nasdaq shed 0.29%, and the S&P 500 looked a 0.09% uptick to close at 4,137 points. The major stock indexes traded actively in the pre-market, though lacking confidence. Futures on Wall Street indexes traded in the red before the opening, signaling risk aversion. Despite the busy economic calendar, the stock indexes are likely to make sharp moves after the closing bell. The S&P 500 is expected to trade in the intraday corridor between 4,070 and 4,190 points. The high-tech sector again came under pressure on Monday. Tesla shares dropped by 1.5% because the e-car manufacturer upgraded the forecast of capital expenditures for 2023. Microsoft shares have appreciated by 17% this year. However, they came under selling pressure because investors are on an edge ahead of the publication of quarterly results. Amazon is another heavyweight whose shares fell by 0.7%. Meta recouped earlier losses and closed 0.04% down. Shares of Bed Bath & Beyond plummeted by 35.7% to 19 cents apiece, following the bankruptcy declaration made on a Sunday. Other retailers, Target and Walmart, added 1.1% and 0.7% respectively. Among the 11 sectors in the S&P 500, energy stocks were the best performers, having climbed by 1.5%. The high-tech sector was the weakest performer with a 0.4% decline. After the closing bell, the bitter aftertaste following the banking crisis is in a much resurfaced on Wall Street. This pessimism affected the pre-market on Tuesday, and the First Republic Bank's share stumbled by 21% in the pre-market after the company said that its deposits shrank by more than $100 billion in the first quarter. The bank is now discovering various scenarios, including restructuring its balance. Stocks of other regional banks, PacWest and Western Alliance, declined by 2.9% and 2.5% respectively. As for the positive news, PepsiCo shares rose by 1.5% after the company upgraded its forecast of annual revenue and profit. General Electric shares also grew by 1.4% in light of raising the lower forecast of annual profit. Spotify shares increased by 4.6% as the company reported that the number of active subscribers exceeded 500 million people in the first quarter because the company expanded its presence in new markets. McDonald's will present its report in midday. Alphabet and Microsoft are due to release their reports tonight. Besides, more corporate reports will be available by Visa, Moody's, General Motors, Baijian, Dow, United Health, and others. Apart from corporate reports, investors will get to know data on the US housing market. Building permits in the United States contracted in March less than expected. and the number of building permits stood at 1.43 million in March, whereas analysts had projected 1.413 million. Still, the reading indicates moderate demand for homes. The US dollar index regained its footing following a fall to 101.10 and rebounded. The greenback traded quietly in the pre-market but picked up in the early trading hours and recovered by 0.22% to 101.50. The intraday corridor for the United States dollar index is seen between 101.10 and 101.90. The US currency rose in value on Tuesday on the back of concerns about the corporate earnings and the echo of the recent bank crisis. On the one hand, major central banks are widely expected to scale down their operations with dollar liquidity, and such prospects mean that volatility shaking financial markets since March is coming to an end. On the other hand, the situation with the First Republic reminded markets that risks to stability have not been tackled yet. UBS quarterly profits slumped twice, and UBS stated that worries about the banking sector's health are still in the cards around the world. Customers' activity could be subdued in the second quarter, and in this context the euro weakened while safe haven assets such as the US dollar and the yen won favor with investors. As the alarm resurfaced, yields of the US Treasuries went down on a Monday. Fed funds futures indicate a higher likelihood of a rate cut at the year end, and such prospects are bearish for the US dollar. Besides, the Federal Reserve now looks less hawkish than the European Central Bank. The US dollar's growth is capped by concerns about the US federal debt ceiling. Republican lawmakers said that they plan for budget spending cuts would be submitted for voting later this week. Meanwhile, the Canadian dollar is extending its weakness against its American rival. The USD cut pair grew by 0.48% to trade at 1.36. The instrument is likely to hold in the intraday corridor between 1.3570 and 1.3650. The greenback's recovery and the fall in the oil prices prevent the loonie from gaining ground. The season of May holidays in China revived optimism about high energy demand. Crude oil rebounded on Monday and continued its rally in mid-Tuesday. The benchmark rates opened today in the red. Brent crude shed 1.11% to trade at $81.11 a barrel, and WTI slipped to $77.91. Tonight, the American Petroleum Institute will report on the U.S. crude inventories. Analysts say that crude stocks could have shrunk by 1.7 million barrels last week. Global oil demand may increase as the United States is beginning its car travel season, and China's recovery is on a sound footing. Nevertheless, investors are still alert to the policy decisions of the Federal Reserve, the Bank of England and the ECB. The regulators are likely to raise interest rates, thus pushing down global economic growth. The crypto market is overclouded. Popular cryptocurrencies are trading in the red within the narrow ranges, anticipating market catalysts. At the moment of recording this video, Bitcoin settled at about $27,400, trading 0.15% down. Top altcoins are trading mainly lower. Ethereum, Solana, Ripple and Binance shed 0.12 and 1.2%. Litecoin is the only token to gain 1.7%. As for the industry news, in July, Coinbase filed a petition with the Securities and Exchange Commission, imploring the agency to engage in rulemaking for the sector. Having received no response 8 months later, Coinbase filed a challenge in a federal court to compel the SEC to respond to its petition. Bitcoin is now trading in the range of $27,200 to $27,800, and the intraday outlook is as follows. If the token declines below 27,200, it could fall to the interim support levels of 26,660 and $26,000. Alternatively, Bitcoin might grow to 29,000. Actual developments will depend on reports by high-tech giants. Upbeat reports will provide a fresh impetus for digital assets. So, make profits with the InstaForex, subscribe to our channel and follow news with us. And see you online tomorrow.